Hi, welcome back to the show. Well, as we get closer to the budget 2017, what are global market watchers expecting from the Indian government? Lata caught up with Lucy MacDonald, the Chief Investment Officer at Allianz Global Investors, and began by asking her if this overarching trend that we have seen in the last quarter of 2016 of selling emerging markets and preferring developed market equities will continue in the first quarter of 2017 as well. Listen into that, and thanks for watching Bazaar.
The performance of emerging markets versus developed is very correlated to the dollar, as you know, and the strength of the dollar post the US election did lead to quite a sell-off and outflows from emerging markets. Now that seems to have slowed in the early part of this year. And although we think there's still medium-term upward pressure on the dollar from rising interest rates, the positioning was so strong in favour of the dollar at the end of the year, it's not surprising that there's a bit of a sell-off. So I think from where we stand now, emerging markets have clearly sold off to more attractive levels. Profits have been taken from the strong performance of the whole of last year. So valuations are now looking more interesting again.
Within the emerging markets, what's the pecking order?
Well, we do prefer Asia, and there we think that the strong growth that we're seeing at the moment should come through because of the export nature of those markets. So that's our first area of looking. We think the commodity markets have had quite a good run, and do have other issues that make us slightly concerned. So Asia is preferred from a valuation point of view, and also as a beneficiary of global growth.
Well, as you pointed out, it is the commodity manufacturers who benefited in 2016 within the emerging market pack. Will that continue, this pro-commodity run, and therefore the preference for commodity producers within emerging markets?
There still looks to be some potential momentum within that sector, which can continue into this year. But really, in the medium term, those aren't the companies that we really think have got the more interesting growth potential.
Okay. Well, where does India figure? We did see an underperformance from India post-November 8. Actually, that date coincided, the Trump victory coincided with India going through a major currency swap or a demonetization program. Does the Indian underperformance end at all? Do you see India outperforming emerging markets in the first quarter of 2017?
There is a potential for India certainly to stabilise its performance, and from the evidence that we have from inside India, but also from the companies that we invest in who are operating in India, it does seem like the effect of demonetisation is beginning to wane. That suggests that if that was the main reason for the underperformance, then that should be losing its importance.